Hey YouTube, what's going on? It's Chris here. Wanted to bring you guys just something I was looking at here. Had some time in between people and I could jump on my computer here. So what I wanted to show you guys was kind of like the .com bubble or whatnot compared to the Bitcoin bubble, and why I truly believe in my heart of heart, guys, we're not there yet in terms of the bottom. Really breaking this right here out of that descending triangle just meant we were going to have continuation. So there was that, guys. And I just want to mark this for you. But I want to go through both of them and just kind of learn from what we have in the past. So there, guys, that was kind of that descending triangle that we built for so long. And when you break out of that, that's a continuation pattern. All right, so I don't see this going anywhere. In 1 second, guys, I got to run and turn off my stopwatch quick. 1 second. Sorry about that, guys. I use a stopwatch for so much in my business, so got a ton of them around the house. But so what you're seeing, we broke out of the descending triangle here, right? We went down, and guys, I truly don't believe we're going to probably be done until we hit this mark right here, which was the top of the last bull market that we had. And that's around, let's see, guys, I'm sorry. Let me pull this down, get this up for us. I think it was the log scale I was looking at. So it was one of them that I saw that I really wanted to bring to you guys. Yeah, it was the log scale. Okay. All right, do you see the top of this, guys? This is where I truly believe that we'll fall to. Right to around there. And remember, guys, I'm not your financial advisor. It's just what I'm planning for, what I have different positions for. But I feel like the top of that's going to be pretty heavy support. So you have the top here. You have this right over here, which is a little bit of support on that little bit of a top. But as you can see, guys, these are the next support areas that you really want to look at. So you're going to have the top there that we don't want to break, which I do think we are lower than that, guys. We're going to have that spot there around 1800 or so, and then we have the spot I was looking at, that 1200. So guys, obviously you're going to have reactions and different things throughout that where you will run up. We could go back up and test 5,000, but I feel like if we test 5,000, there's going to be a lot of people who are going to be ready and setting up shorts, guys. So say we did bounce back up to about right in here, the 20-day moving average, which is around 4,000 even. Guys are going to be shorting off that, I promise you. So just be very aware. Be safe, guys, and just know, don't FOMO into anything, because when the major trend is down like we're having, even when you have these reaction rallies, you see a reaction here, we got pushed back down, reaction, got pushed back down, we had that bullwhick, got pushed back down, now we're falling here, guys. We could come back up to $4,000 maybe and get pushed back down to that $2,000 range, $2,500 range. So I'm not saying it's going to 1,800 overnight, but I just feel like that could potentially be the bottom. That would be my guess. If I had to bet everything that I own on it, guys, I think we're going down more so than we're going up, unless we're just having a quick reaction rally before we get slammed back down again. You know, and that's just to cool off the RSI, those different type of things. But take a look at this chart now. So let's get this off, and I'm going to zoom in a little bit more on it so you guys can really take a look and kind of compare. Now, no chart's going to be exactly the same, guys, but I want you to look at this. All right? So this here, the .com bubble, you can see how you had that massive spike. And then, guys, just like in Bitcoin, you had that huge sell-off. Then we bounced back up to 10,000. So let's go back to that. Do you see this, guys? So we came down here, and then we bounced back up just like that. And that actually got us to around that 17,000, guys. And that's when people knew to get out. That's when they were saying on that reaction, they said, I'm getting the heck out of here. So you see this drop here. We came back up just like that. Then you have this big leg down. Okay, so let's go back to this one. Do you see this big leg down? Just like that. So far, it's very similar, guys. And then just like this, you had those reactions that were coming up. But what was happening? You were having lower highs and lower lows. Do you see that? Just like we're having now. So if we zoom into this, what are we having, guys? Lower highs, right? All the way down to here. And we're having lower lows. Just like that. Now, crypto is a lot faster than a lot of these other markets, so I want you to take that into place. And from all I've been studying, a typical bear market is about 18 months, guys. And we're at about 11 or 12 right now with crypto. So you're just seeing that move, though. This took, guys, from 2000 all the way to 2003, and then I'm not sure what happened after that, guys. I don't know if it just died or what. I know I've heard all about the tech bubble. I haven't researched too much into it. I was just looking at the charts here. But as you can see, I mean, guys, that's a massive drop that you had there, and it took time. It took 3 years. So us only being at 1 year right now, there definitely could be more time, guys, in this bear market. And I want you to be aware of that, be patient, and be calm and relax. And know, guys, if you plan on being successful in this, it could be 2, 3, 4, 5 years before we see another massive top like we saw before. But it's going to happen. And I want you guys to be aware of that. It's going to happen. It's just, you have to be patient with this stuff. And, 2019 could be a big accumulation year where you just really get stuff cheap, lock it away best you can, and, just wait, guys. Just hodl it along. But if you want to make a move on the downside, there's a lot of potential too. Just watch out for these areas. So like this area here, guys, at 3,000, you can see we got a nice bounce, nice volume, and that kind of kicked off that big run that we had. So, we got to pay attention to 3,000 as support. And remember, I didn't say we're going to do exactly what those other charts have done. The bubble pop return to the mean. Anything could happen, guys. Backed could get approved or come in when they're supposed to, and we could be moving. But you want to be aware of these things, guys. So 3,000, 1850 I would be looking at. And this isn't even including Fibonacci levels, guys, which I love to use Fibonacci. And then around this 1,200. Those are the next stops. And just remember, if Bitcoin goes to 1,200 or 1,500 or something like that, just imagine where the altcoins are going to be, guys, how low and how cheap you could be able to buy them for. So, keep that in mind. Obviously, it's not exactly like this, guys, but, it's pretty similar, and we've learned a ton from this. Anytime you see something, you see that straight up move, it's going to get completely erased, guys. I promise you. It's always going to happen. Right here, we'll just click on this one. Do you see this move straight up, straight down? Look at all these different charts, guys. Straight up. Better take those profits. It's going straight down. So, you know what? We've learned a ton, guys. It's just something that we have to take day by day. I mean, take a look at this one here. So we were all the way up around that 5,000. Like we said, we came down. Smart money got out here. Had that massive fall. And then there, guys, that's what you have to look for. Do you see this higher low that formed? And then we started moving up a little bit. So you're going to have the lower highs, lower lows, and then when you start to see that first lower high being put in, you want to look for a higher low and then just move that trend, guys. That's how it happens. Just like you can see over here. Lower highs right there, and then higher lows. So keep this stuff in mind, guys. I just want to bring it to you quick. Kind of tell you my plan a little bit. I'm not going to get into too much detail, obviously, but I just wanted to give you what I'm looking at. That we may have a little bit of a run back up, but most likely we're going to be getting pushed back down, guys. That's just the direction of the trend. And if you want to argue with me, then argue with me. But it's been that way for 11 months. And every time we have a reaction, we've been getting slammed back down. So it's always safe to hold some, guys, have some really long-term holds. I think that's really smart, just in case, overnight, huge amount of money gets put in from God knows where we didn't know, and things really start moving fast. So you got your long-term, you got your hedge there. Then you can swing trade, guys, and then you can have a little account for day trading and stuff. If you just want to get in and out, do some scalps, try to make a little bit of a profit, that type of stuff, you can do that. But God bless each and every one of you. Maybe I'll be able to get one more out today, guys, but it's a busy day. So take care, my friends, and like and subscribe.